on, it's been a tale of two tapes on Dalal Street so far in 2025, with a stark divergence between two of the market's most heavily watched sectors, that is banks and IT. Soumeet joins us to tell us more.
Well, if you look at the divergence move of the Nifty IT and the Nifty Bank for 2025 on a year-to-date basis, it has been a clear divergent move for both the main indices. Nifty IT index is down around 10% while the Nifty Bank index has managed to gain around 10% so far. Now, if you look at the last 15 years, we have tried to bring it here, how the performance has been for the Nifty Bank and the Nifty IT. Now, Nifty Bank has outperformed the Nifty IT index nearly 8 times, 2010, 2011, 12, 14, 16, 17, 19 and 2020. While the Nifty IT has outperformed the Nifty Bank index nearly 5 times in the last 15 years, while for these 2 years, that is 2023 and 2015, the outperformance or the shape or the index performance of the Nifty Bank and Nifty IT were quite similar. Now, it's important to know how the second half turned out to be for the Nifty Bank whenever they have outperformed the Nifty IT index for the first half of any calendar year. So, they have outperformed 8 times. For the second half, if you look at the nearly 5 times, the Nifty Bank index has managed to outperform the Nifty IT index. First in 2012, as you can see, the Nifty Bank index gained nearly 57%, while the Nifty IT index was down 2%. For 2014, the Nifty Bank index has managed to gain nearly 65%, while Nifty IT was up only 18%. In 2016, the Nifty IT index was down 7.5%, while the Nifty Bank index was up 7.5%. In 2017, the Nifty IT was up just 12%, while the Nifty Bank was up around 41%, while in 2019, the Nifty IT index was up just 8%, while the Nifty Bank index, that was up around 18%. So what has played out so far for both the bank and the Nifty IT index? Now, for the bank, if you look at, it's the liquidity infusion that RBI had done, coupled with the fact that there was improving asset quality and unsecured lending related stress was also peaking out. So these factors have led to a better performance coming in from the banking index. But when it comes to IT index, is the slowdown in the key market, that is US and Europe, coupled with the fact that there was tariff war, which also led to more uncertainty, and these two factors have led to the underperformance when it comes to the Nifty IT index. But when you look at the outlook is quite different than what has played out so far. For banking index, if you look at the next couple of quarters are expected to be weak owing to the rate cut. Analysts are expecting the net interest margin to come in on the weaker side. They also expect a pickup in credit growth only in the second half of this financial year, and they're saying that easier project financing norms will aid PSU banks and not private banks, and asset quality could improve for the banks in the second half. But when it comes to the IT index, they're expecting no material deterioration in the spending environment. Revenue growth outlook is expected to be little better than what the street was estimating earlier. There was limited room for upside surprises, but it could be still on the better side. And they're also expecting a pickup in order booking and deal pipeline related commentary, is something that will be important to watch, and they're expecting some improvement to come in on that front as well. And now if you look at the valuations are largely at par when it comes to the Nifty Bank and the Nifty IT index. The 12-month forward Nifty Bank index price to book, if you look at, it's around 2 times, while it was around 2.1 times, that is a 12-month forward, while for the Nifty IT index, if you look at the 12-month forward valuation, stands at around 25.3 times, while the 5-year average stood at around 25.5 times. Now, lastly, what is the conclusion that we are getting out of this? The conclusion is the fact that the Nifty IT index is better placed, at least in the near term, as per analysts, because the earnings could be better as compared to bank, which could see pressure on the net interest margin. However, the long-term outlook for the IT index would completely depend on what is the management commentary coming in the first quarter of FY26 earnings. Currently, only 4 stocks in the Nifty IT index have a return potential that is in the positive territory. TCS has a return potential of 11%, Oracle Finance with a return potential of 9%, while Infosys and Emphasis have a return potential of around 3.5 to 4%. But this could change based on what commentary is coming in from the management in the first quarter of FY26 earnings.
Right. Thank you so much, Soumeet, for all the details. Well, Sneha, you heard Soumeet, and now how are you seeing Nifty IT as a sector? And clearly, because of the earnings growth expected, Nifty IT is expected to perform better. But your view on the overall sector and your picks from the same?
Okay. So see, basically with regards to IT sector, though Somil was talking about that in the near term, the numbers might be like, a little better, but it's very difficult to say so because recently the Accenture numbers that came out and the kind of commentary that the management gave, so that clearly shows that the uncertainty is still there. Though the companies have, they are showing confidence that the uncertainties are manageable. But for the, a new technology cycle to start, still there's a lot of time. There's a kind of, disconnect between, the Indian companies are talking that only the cost related deals are getting announced with, while Accenture is saying that the AI related deals are getting awarded more. So somewhere, there was this disconnect recently that we noticed. But having said that, what we believe is that the uncertainty is there, but then the it's not completely on the, on the negative side, because given the global uncertainties, we've understood that the impact of this is a little limited, and probably in few months time the clarity will emerge with regards to how the, the companies are placed with regards to their discretionary spending. And thus, from second half we are expecting some sort of recovery for these IT companies. So hoping for the best, and we believe that the, one can really do the bottom fishing in this sector, and really hold on to the companies which are, a better place in terms of earnings. And thus, having said that, TCS is, in the large cap space we like TCS and HCL Tech, while in the mid cap space we like Coforge and Persistent.
Right. Well, thank you so much for that view.